big event unfolded last week. SEBI decided to further relax real estate investment trust or REITs and infrastructure investment trust norms for companies to raise funds. Now, according to the new regulations, REITs can invest in two-level special purpose vehicle. That's a structure through holding company. The second big change which has happened is holding company would be allowed to disburse 100% cash flow realized from the underlying SPVs and at least 90% of the remaining cash flows. Another big change, SEBI is proposed to allow such trusts up to 20% investment in under construction projects, up from a maximum of 10% allowed before this. Now, this is really critical considering that a lot of real estate projects and infrastructure projects are actually in very early stages, and that's where a big amount of cash is needed. SEBI has also removed the limit on the number of sponsors. Currently, 3 sponsors are required. So those are some of the main changes, but let's get really good insights from Ambar Maheshwari, CEO, Private Equity Funds, India Bulls Asset Management Company, and Saurabh Chawla, Executive Director at DLF, on how they're looking at these proposed changes in REIT. Saurabh, I'm going to come to you. We've been hearing and reading that DLF is quite happy with the changes which have been made. But if you were to just highlight some of these changes and relate them to how they would apply to your business and your plans to go or launch a REIT really quickly.
Well, I think, Manisha, I did mention in your program few quarters back is that at this current stage, we are not going to be listing out our assets, and we are just going to be finishing off our current transaction, which is actually a kind of a private business trust. So any listing of assets into a REIT would be a matter of discussion between DLF and the new shareholder who joins this particular entity as to when and where to list those assets. Having said that, the current changes which SEBI has got on the table, these are very welcome. India is governed with very complex corporate structures in which we hold land, and any flexibility to put those assets into REITs, that is a welcome sign. It's a good statement of purpose from the regulator, and it will surely bring transactions to the market, in my opinion, in next 8 to 12 months' time. So we're still some time away, but yes, this flexibility will go a long way.
All right. Amber, do you now feel that in the current form, SEBI has actually made it possible for a REIT to get listed in the next 8 to 12 months? That's what Saurabh's talking about. Is that a possibility now, a real possibility?
So, Manisha, I agree with Saurabh that it is some time away. And I've maintained this before and have said this to you as well, that really it's not a matter of regulation anymore. I think the government has done all that they could to be able to enable regulation towards, REIT listing and so forth. I think it's more to do with the sort of returns that one is expecting out of REITs and the sort of investors that would look at that kind of a return, which is going to be a challenge, from an immediate basis, if you look at it, So I still think that this is some time away, despite what the government is trying to do on the regulation front.
So, Amber, what are the expectations that investors have from the REIT listing? I mean, is it literally 7 to 8% sort of figures? And those are very mouth-watering figures for any foreign investor, isn't it?
So, 7 to 8% is a return that one is looking at from an income-producing perspective, from the REITs, the way they are currently stacked up.
Okay.
Even from a foreign investor perspective, if you look at it, one also needs to take into account the exchange rate equation, the currency that dollar versus rupee movement that one has seen over the last 5 to 7 years, and how that will impact these returns and so forth. So, in my opinion, I think this is slightly more than just, whether you do a holding and an SPV sort of a structure, you've allowed that. That's more semantic, or 20% under construction properties are allowed and so forth. I think there is a structural shift that one is looking at from the return on REIT perspective. and I've said this before, Manisha, till the time an individual investor can get a fixed deposit rate of 6% or a government bond of 7-ish% from a liquid fund perspective, why would you take that additional risk and invest that money into REITs?
Okay.
That is something which needs to go down. The fixed deposit rates have to go down. The risk premium has to increase. Mortgage rates have to go down. And that's happened before. If you look at what India used to be in 2005, 6, 7, your interest rates were 7%, mortgage rates were 7%, FD rates were 4% or lower than that. In that scenario, a 7-8% plus risk-adjusted return for real estate looks a little attractive. But the way things are stacked up today, it's still not looking attractive, I'm sorry.
That's a very pertinent point, and I'm glad you made that again. Of course, I remember that you made that. Saurabh, is that the reason why DLF would rather bring in money from investors directly into the company and not really look at a REIT? I mean, the possibility that REITs are not going to be attractive as of now, I mean, and you've got a spate of investors coming into the company at various stages of your projects. At SPV, you managed to get equity as well in some of your residential projects, which is very good news. So is that also something which you think holds a lot of water, what Amar has said, that they're not right now interesting in terms of returns?
I think the points that Amber has touched are very valid. But I think what we are forgetting is that a REIT is not a bond or a fixed deposit. It's a yield plus a growth on the yield. So this is something which the investors in India especially will have to be educated well, that they've only very long-term investors who are willing to wait for few years to get a total return in excess of 12-13% on an annualized basis. That is the only way this particular investment will really get sold. You will have to have the Indian insurance companies, Indian pension funds participate substantially in this particular product. So this is not an IPO. People keep treating it that this is another kind of a real estate IPO. There's a pop, at the time of IPO, and you can make 20% more returns over a period of time. That's not going to happen in this particular space. So the foreign investors understand this particular paper well. You're absolute. You need very patient capital, and you need very long-term capital, long-term investment horizon, because property value appreciation, the growth that comes, that has to factor into the value of the REIT. It doesn't factor it on a quarterly or annual basis. You'll have to give it a horizon of at least 4-5 years before it starts to really factor in. So even if you were to take a current yield of 7-8%, this particular, it is based on a portfolio of leases which are growing 5% every year. So if you were to overlay that, you're already at about 12%. And any cap appreciation that happens or any decrease in interest rates will have a positive impact on that particular paper. But this is not something which, frankly speaking, a retail investor today in India understands. Leave aside retail, even institutional investors today really don't understand this play. Okay.
All right, Amber. So so it's always good to get a contrary point of view, but there are big players like both Embassy and Prestige who have continuously said that they're quite ready actually to go ahead and launch a REIT. So what I'm trying to understand is, now do you think, forget about the rates of interest and what you would earn out of REITs, but do you think at least now with SEBI new regulations, new changes or relaxations, there are no more hurdles left from a company's perspective to go ahead and launch one?
Oh, absolutely. I don't think regulation-wise there are any hurdles. The semantics that have changed just now also really weren't hurdles, even earlier. These were just semantics. These were just things which, sort of had to be done and had to be clarified. So from a regulation standpoint, I don't think there is any hassle, anymore that one needs to be careful about if you were to launch a REIT today.
Very, very quickly, the final question is that, the number of sponsors, the limit has been removed. Now, And the interpretation of that, Amber, I read was that now smaller companies, 4, 5 of them can get together. No longer is it limited to 3. My question is that really relevant in the Indian context? I mean, is there that much of good quality, grade A supply of office space and commercials? I mean, or like you said, that is actually that precisely proves your point that it is a lot of semantics.
Absolutely. In my opinion, I don't think this should have been done. I think the 2 things that I haven't really liked are 20% under construction property and the number of sponsors. Particularly at the nascent stage at which we are at this point in time, but not even one REIT that is around at this, today. Again, the fine print hasn't come out. We haven't really seen the statement or the notification as yet. I don't know if by taking away the number of sponsors, the minimum or the maximum number of sponsors that have been taken away, does that now include some asset manager that could come in and contribute a little bit amount and be a sponsor as well? So some of those things are yet to be confirmed. But I don't think it's a good idea to not have a limit on sponsors, particularly from a retail perspective. This would only increase diligence-related issues. This would only include, even for institutional investors, it would require a lot more diligence now if 4 or 5 smaller guys come together and put it up. We're again going back to the same thing that, I don't know how strong the regulatory machinery would be to be able to monitor and manage each and everything. Valuation issues, variety of things that will come into play.
Absolutely. No, I get that. So the risks also go up. I mean, for a new product, it's okay to keep it a little bit tight. Saurabh Chawla and Amber, thank you very much, gentlemen, for joining me today. It's been a very interesting discussion. I think it needed a lot more time to get both points, but I think we've got the crux of the discussion, and we'll wait for the paper and probably schedule a larger debate. Gentlemen, thank you very much for joining me.